now the basic theory of what I'm looking at. I'll give you numbers associated with certain highs and lows in the market that we can take advantage of to be able to take profits at. And there are reasons why we take profits at those points, and I'll mention when we get there. Now, basically, what I'm looking for in a market is an uptrend. And what we eventually will go through is this sideways consolidation, which a lot of the times will then turn into a downtrend. Now, when I'm looking at this, it might think, oh, well, you know, is this over the last couple of days, months, weeks? As I said earlier, this structure, this pattern occurs across all time frames. So in a bull market, for example, this advance through here could be 3 or 4 or 5 years. On an hourly time frame, this might be over 2 or 3 hours. So it just depends on the time frame you're looking at. But the principles remain the same, namely to be buying pullbacks and to sell rallies. Now, it seems simple, but for most people, a very difficult way of trying to trade the market, because let's face it, if the market is declining, it's not doing it on good news, it's doing it on bad news. So most people will sit there and think, oh, when the market pulls back, I'll buy it. It pulls back and they think, well, no, I might wait another 2 or 3 days, and then it goes lower, and then something that seemed a good idea 2 or 3 weeks previous now turns into something that you're not too sure of, and you're not too sure how to enter the market and buy it, so that you don't. And then what a lot of people will do is then they won't buy the decline, but they'll eventually try and buy the break above the high or sell the break below the low. Now, it looks good in theory, but in practice, that attempting to buy a breakout, whether it be in an uptrend or a downtrend, 70% of the time will lose your money. So the real opportunity in trading the market are the pullbacks and trying to get in as close to the turn as possible, so that by the time we get to the breakout point where most people are entering, we're taking profit. Now, when I go into what I call a 3-swing structure a little later, I'll explain that in more detail. But here, basically, it's the philosophy of price. It's what I call this, where we're making higher highs and higher lows in an uptrend. Price goes through this choppy phase, which generally will terminate the uptrend and then lead to a downtrend with lower lows and lower highs. So that's basically it. Quite simple, no complications in it.